Hello everybody, so this video is entitled MSTR Saylor Talks. Saylor is having his big conference today in Las Vegas and Bitcoin up, Bitcoin is bouncing today. So let's go ahead, let's briefly talk about it. MSTR outperforming Bitcoin in line with what is expected, roughly 1.5 times. So that's very good. We're bouncing on MSTR because Bitcoin is bouncing. And why is Bitcoin bouncing? Well, there's a few bullish pieces of news out there right now. Of course, we had the Mike Alfred tweet going viral about Jane Street potentially turning off his algorithm. And we actually may have witnessed something going on yesterday. You may have noticed the price went up $2,000 on Bitcoin in minutes out of nowhere. As if some algo had stopped manipulation right at that time. Out of nowhere, just went up for 2K, went up $2,000 in minutes. Anyways, that's point number one. Point number two, of course, is this news about the CME gap. I've talked about it in my channel, but the CME gap, on Sunday night, we dump, right? That's the usual. Sunday night, we dump. We have also the Friday evening shenanigans. This might actually be gone in May 26. May 29, 2026 is when this might be gone, when CME goes 24/7. So it's possible that a lot of traders are getting ready for Bitcoin to bounce by then, and that should also coincide with a new Fed chair and a dovish Fed chair. So it's possible, given that we're closing in, it's like 4 months in. 4 months until that point, it's possible that a lot of people are taking bullish positions now on Bitcoin because there is positivity on the horizon when it comes to Bitcoin. Now, moving on to strategy itself. The theme of the conference, and I'll get to it in a second, but the theme of the conference, of course, is all in on stretch. It's all about stretch, just stretch, only stretch. And actually, in after-hours trading, we had stretch hit $100 twice in after-hours trading. Unfortunately, TradFi makes it so that a lot of good price action, which would allow, for example, Saylor to ATM, that good price action happens when the markets are closed, unfortunately. So we are at 99.92. If Bitcoin keeps behaving well today, it would be possible for Stretch to get back to 100. And wouldn't that be a beautiful thing while Saylor is having his big yearly conference, Bitcoin for Corporation? So I have listened to the whole thing, actually. 2x speed is really helpful, sometimes even 4x speed as they take coffee breaks. But anyways, I have a few takeaways. If you follow strategy like a lot of us do, you're not going to learn a lot more. But I'm trying to find you like something that is new. So Saylor seems to be blaming Rehypothecation as what's going on with Bitcoin price right now. And that's also from the Natalie Brunel interview. So he seems to be talking about that, and he calls it a mini winter. Or he called it a mini winter. Well, okay, whatever. Short-term price action, but it's what Saylor seems to be acknowledging, and a lot of people like that Saylor acknowledged that. Then, of course, nothing has changed for the past 6 or 7 months. They are all in on stretch. All in on stretch. And then a panel highlighted this, but I've been also saying this a long time in my channel, is AI is disrupting just about everything. I mean, we know cash flow debt backed by, say, commercial real estate is on shaky grounds to begin with. A lot of the debt is on shaky grounds because of the cash flows. What is the certainty that the cash flows will remain in perpetuity or for the next 10 years, 20 years, 30 years of the bond, right? Even for government debt, like, okay, we seem to have 2 to 3 shutdowns a year. How do you know that a government shutdown can't last half a year, right? That happened recently in countries like France or like Belgium, right? Where they had, I think Belgium was like 300 days at one point. So it could totally happen to the US. You could have a shutdown that lasts more than 180 days. And then what happens to the coupons in that situation? So debt backed by cash flow is riskier than debt backed by hard assets. And that's the whole point of Stretch. Stretch is debt backed by Bitcoin, backed by a hard asset. The principal is backed by a hard asset. That's why they are all in on Stretch, and they are betting that over the long run, the market will eventually realize that it's probably better to not invest in cash flows, but to invest in hard assets backing the debt. That's the innovation between the preferreds, between the Saylor preferred, and Saylor also mentioning that not on Stretch, of course, because Stretch is designed to trade at 100, but on things like STRF or STRD, he expects a re-rating as, we have a gap of like 500 basis points, more than that actually, between the Saylor bonds and the risk-free weight. He expects that risk-free, quote-unquote, right? He expects that gap to narrow. And so what if we only have 100 basis points instead of having 500 or 600 basis points higher? What if that gap's narrow? Well, that means that a lot of the preferred instruments of Saylor, which are right now trading in the 80s to 100, these instruments could trade to the 160 to 200. And so that would be a double just on the debt instrument alone. And that doubling could come simply from the bond market realizing that digital credit is a real thing and it's not backed by cash flow. It's backed by something actually tangible. Okay, so point number 3, of course, quantum was still discussed in that day, and it seems like it's a narrative that's pushed by TradFi. TradFi seems to be very sensitive to this narrative. Saylor pushing back very hard about quantum, saying that quantum is well more than 10 years away. And of course, it will be just an update to a protocol to deal with quantum, likely a fork. There would be just like Ethereum and Ethereum Classic back in the day. That's probably what would happen. Kathy Wood also said the same thing in her presentation not too long ago, that quantum is always 30 years away. A lot of people are negative in quantum, saying it's kind of like fusion. So it's always 30 years away. But the odds are right now, quantum is not a threat. It's a narrative. It's a big narrative. And Saylor is not worried a single bit about that. Then they had an analysts panel, and they had the usual analysts that are on the call. Wall Street analysts, I'm talking TradFi analysts, they had a panel talking about how they got it wrong on Bitcoin price target. Everybody was surprised by this macro. So before I discuss the macro briefly, the issue, of course, is that the Bitcoin price went the polar opposite of what we were all expecting. But they don't understand why, and I don't understand why myself. There is liquidity issues in the system. So the analysts are saying, we're still predicting, a circa $200,000 by year-end 2026. I mean, you bet, especially with a dovish chair coming in, a dovish chair coming in. Institutions joining in on the Bitcoin wagon. ETFs. I mean, we have Clarity Act. We have so much bullishness going on for Bitcoin. It makes very, very, very little sense why Bitcoin is trading so cheap. And so the analysts maintain their price targets, and of course, they'll eventually get it right. As Saylor says, Bitcoin is either going to 1 million or it's going to 0. But yeah, it's the macro, people. And the market continues to be crazy. As I record this, we have a mad up day, but not for all stocks. Some other stocks are the market is entirely crazy. I mean, like I said, I defined this in my prior video. You had AMD stellar earnings, PayPal awful earnings at PayPal, stellar earnings on AMD same day. Both stocks down 20%. Right, it's like the market is not discerning anything right now. There's liquidity issues under the hood. The short-term traders own the market right now, and it's very, very tough to understand what's going on, which is why I've been sitting on the sidelines for a little while. But anyways, so these are the main takeaways. We're happy with Bitcoin up today and Stretch. Hopefully Stretch by the end of the day, we reach 100 actually during market hours, so Saylor can ATM. We did reach 100, but not during market hours, unfortunately. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you're entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.